Okay, good morning. And boy, is it a beautiful one. It is already starting. It is already just, exactly the kind of day that I hoped for. Money or no money. This is just beautiful because it's just confirming that we know exactly what is going on. We know exactly how to play this whole freak show. And it just makes me so happy, so giddy. So, what am I giddy about? Well, let me start with this. When I started watching the market in, say, 2018, about early February 2018, it would have been, I watched the CPI numbers, which we got this morning. Invariably, a higher than expected inflation number was negative for the market, negative for precious metals, and pushed things lower. Because during that time, the Federal Reserve actually was raising interest rates, and it was signaling to the market that it would raise interest rates because they were trying to get to a level where they could then drop the interest rates and it would actually matter. That's the whole theory behind what they do. But again, every single crash, you'll see the interest rates go down because they stimulate, they go back up, but they're never to the level that they were before. And then they go down again, and then the same thing happens, not to the previous level, until you get to where we're at now, which is zero interest rates in perpetuity. Negative interest rates are coming, if you didn't know that. Okay, but what happened this CPI report? And what has been happening for this CPI report, and at least the last CPI report? Oh, gold and silver. $20 off of the low. Silver, 2% off of the low. They were down pretty heavy this morning. Silver is flat now. Gold is pretty much flat now, down $2. What happened to the major indices? Well, they're going higher across the board. The Dow particularly up 140 points on the futures. S&P up 0.2%. So, why is the market taking this inflation data as so positive? Well, let's go back again. Why did it react negatively before? Because they thought they were raising rates. Now, normally, if you had a Fed that was really committed to stable prices, which this Fed isn't, they want the inflation. If you had that Fed that was really committed to the stable prices, then the market would react negatively. It would anticipate that interest rate hike. But the market knows that what the Fed wants is inflation, and a confirmation of an inflation reading this high with past year CPI rising 5%. 5%! Do you understand how big that is? That is huge, okay? And it's only going to get much, much worse from here. And again, this is what we're allowed to know. So it's probably higher than that. It's probably much higher than that. Okay, so the market knows that the Fed will not be raising interest rates, and therefore it sees this as a confirmation that the Fed's policies are quote-unquote working in the way that they're helping the Federal Reserve, they're helping participants in this market, they're helping people that know what's going on, and people that are in power on top of the money, like we are when we get involved in this market and we take control of our assets rather than having them sit in the dollar, okay? And that's really all there is to it. The Fed will not stop. It will continue the printing presses, and core CPI is going higher from here. And I've told you this before, and I don't know why you would be a dollar bull in this environment. I mean, it is really not going to stop. And so what is happening to the dollar off of that data? It's still above 90, okay? And I've told you, this is the level I want to watch. So I'm not saying we won't see some sort of reversal. Maybe some Fed president will be floated out to scare the market a little bit. I don't really know, but right now, off of the CPI data, the market is not buying a rate hike, okay? It is buying just a further expansion of the debt program, and that is why you're seeing everything rising. Crude oil higher by 0.5%, all right? And the 10-year yield, now it is higher. Why is it higher? Well, it's just inflation. If you have inflation, you need to compensate the yield you're getting for the inflation, so therefore it goes higher. Now, some people think that, or some people say on media that, oh, the 10-year yield is rising because it's anticipating the rate hike. No. Totally wrong. It's all about inflation. All right, other than that, I think that's all I really wanted to cover. I like to keep these videos short. I did have one other thing, though. The ECB's Christine Lagarde. Ah, she's so sweet. No, she's not sweet. She's not sweet. They raised their short-term inflation outlook from 1.4% to 1.9%, and their 2023 inflation forecast is at 1.4%. I mean, what? Oh man, these people are really out there to just confuse you, not make you understand what's going on. I mean, inflation of 1.4%, it's probably 5 times higher than that right now, okay? And if you don't understand how they fudge this inflation data, look at hedonic adjustments. Everybody does it in different ways, but it's adjustments for quality. So it gets higher quality, so therefore the price shouldn't be as high. That doesn't make any sense to me. Maybe it makes sense to you. I understand the theory behind it, but I think it's total BS. I think it's just used to hide inflation numbers. And it makes a lot of sense from their context. It would be a very powerful tool. Okay. Let's leave it there. Looking beautiful. I mean, I hope this continues. Obviously, I don't like inflation. It destroys the middle class. It destroys poor people, and it helps the rich who own inflation hedges, such as stocks, gold, silver, cryptos, right? But I understand this is the game. I'm playing the game accordingly, and it looks like it's paying off. So let's see how this day plays out. Still watching the dollar below 90, if it can get there, and if it does, I really think if we get a break below 90, you might see some gains in precious metals, cryptos. Bitcoin is a little higher, over 37,700 right now. All right, I'm gonna leave you on that. I'll see you at the end of the day. Hit that like button, hit that subscribe button. You know the deal. Have a good one. All right.